Well, good evening, everybody. I am Lee Seiler, also known as the Stock Doctor, and welcome to the Hump Day Market Update. And today is Wednesday, July 15th. And, before I get started, I'm looking for something here because this is something really funny, some really funny stuff I'm going to show you. I want to give kudos to Ford. And, Ford, of course, is coming out with the new Bronco. And, hold on, I'm going to try and, okay. It's interesting, but somebody in Ford marketing figured it out. Thank you, because they were going to release the Ford Bronco on July 9th. That was earlier this week, okay, or a week ago almost. But somebody figured out that it was also the birthday of this man, O.J. Simpson. So, here's a picture of the new Bronco. It looks like the old Bronco. It looks the old white Bronco you saw on the headlines in the TV. But yeah, so anyway, I have to give kudos to Ford. Their stock is not performing worth a crap, but at least they prevented a major faux pas and not showing, not unveiling this vehicle on OJ's birthday. So let's go over what the numbers were for today. And look, the markets have had a nice little rally here the last few days. I'm going to tell you that I don't like what I'm seeing, but we are participating and we are enjoying, although I'm going to give you some reasons why I don't like it. But let's talk about today. The Dow Jones, and one thing I don't like also is I don't like when markets open up really, really hot, up 500 points, and then either sell off or end lower in the day. That is disconcerting to me, and that is going to be a problem down the road. But for now, let's just enjoy the move, okay? Today, the Dow Jones Industrial Average up 227 points to close at 26,870. The NASDAQ Composite had been on fire, up about 0.6%, 61 points, 10,550. The S&P 500 up 0.9%, 29 points at 3226. Small cap stocks led the way today. That's important because usually it's the smaller to mid-sized companies that lead us out of recession. Okay, so really interesting. But the Russell 2000, which is the index for these small cap or small companies, up 3.5%, 50 points at 1478. And, last week, the markets were all over the place. We had a lot of volatility. And here's what's basically giving the market some kind of, because when you look at it, the top 5 stocks in the S&P 500 now represent 25% of the S&P 500. So those top 5 stocks are doing great. But what that tells me is the underlying market is not doing as well, and that's fact. A lot of stocks are still significantly lower for the year. So here's what is disconcerting to me. And by the way, tonight's show is sponsored by the Alley and Fuel Barbecue. Thank you very much, Chris and Michelle. And we appreciate very much the Crown Royal Reserve. That's tonight's drink of choice. We got a few other new sponsors tonight that we'll talk about a little bit later. And actually, one is a really cool sponsor. Really cool. And I'll talk about it right now before we get started. Scuba Time. Scuba Time. They have scuba classes offered, and they can do it at your home. If you have at least 2, the ideal class for travel, you will be fully licensed at the end of this weekend course. If you have 2 to 4 people willing to take scuba classes and get licensed, they'll come to your place. Randy Lyle is the instructor and owner of Scuba Time. 863-289-7108, 863-289-7108, ScubaTimeInc.com. Check them out. I am actually licensed to scuba dive. Haven't done it in many, many years. That was probably about 20 pounds ago, so not sure I can do that right now. So let's talk about what has happened. What's carrying these markets? Well, what's been carrying the market really has been Apple and Amazon and Google and Microsoft and Netflix until the last couple of days. So the top 5 stocks in Facebook, even Facebook with bad news continues to roar forward. Apple has really, what's happened with Apple is you had a lot of upgrades now. The stock has done so well, a lot of analysts are upgrading their price targets. Now, I want you to think about this. Those price target adjustments, up or down, really don't mean anything. What it really means, and look, that's why I don't really like having price targets. What I would say is that, technically, meaning on the chart, looks like the stock will probably start finding resistance here. It's hard to produce exact price targets. So Apple last week had a price target bump to 419. Now let's talk about where Apple closed today at $390, up 267. It did hit 399 earlier this week, but Apple had a price target, Needham today, a $450 price target. So Apple stock has done unbelievably well. So let me give you a quick view of what we're looking at here with the stock. It has just been unbelievable. Look at this. Look at this. An absolute parabolic move straight up. And this is March 23rd. Unbelievable. March 23rd low, by the way, is ridiculous. $212. So Apple is up about 80% since March 23rd. That's incredible. Now, what I want to talk about, and we'll talk about this a little bit later as well, is it's giving me some signs that it's getting tired. And oftentimes when analysts jump on the bandwagon and start raising it, because Needham wasn't the only one. There were several others that raised their price targets. But when you start getting a lot of that price target raising, that to me is usually a sign of frothiness. And I'm going to tell you another thing, and one thing that also is bothering me. And first, I want to tell my friends and my acquaintances that know my cell phone number and text me and call me. You're welcome to do so. I'm here to try and help you. I would gladly try and help you prevent making an investment mistake. That's what I'm here for, okay? Whether you're a client or not, okay? So I just want to make that clear. But when I'm getting 3 to 4 calls or text messages a day from people I know, either friends or acquaintances, saying, hey, what do you think of this $2 stock? What do you think of this 1.7 cent stock? What do you think of this 50-cent stock? That just tells me is that people are getting way too reckless and they are starting to gamble. And I talked to a friend of mine. This was not an acquaintance. He's a friend of mine. You know who you are. He bought a $2 stock. Kudos to him. He bought it. It was a COVID play, and it was at 17, and now it dropped down a little bit today, but he's still way up. And I said, "Wow, you're quite the gambler." He said he was bored. I mean, that's the answer. So I think a lot of that is what's happening, and that is going to cause a major topping pattern in the market. I'm just telling you, I don't know when it's going to happen. I'm not going to call and say the market's seen its highs, because it could stay frothy for a while. We've seen this. I mean, it took when Chairman Alan Greenspan, when he made his call of irrational exuberance, that was 1996. It took the market 4 years to start correcting. So you can be early on those calls. The key is, and I may not like what I see, even Apple, which is one of the greatest companies in the world, and by the way, they got out of $15 billion in taxes in Europe, which is smart, although that's a drop in the bucket. That's a pimple on the face of their ass, by the way. So, Apple hitting those highs, and it's even trading at 30 times earnings, a PE of 30, which is extremely pricey for Apple, their growth rate and their revenue and earnings growth. So that's disconcerting. The speculation is certainly a concern. I am happy to see some of the value stocks, because what you're looking at is the 5 big ones that I talked about. Facebook, or we'll call it the FANG or the FONG, which is Facebook, Apple, Amazon, Netflix, Google, and we'll add Microsoft in there. Those stocks have done extremely well, and they're making money. They're companies that will make money. However, they're trading at very pricey multiples, so they need to come in and they better deliver their earnings. And they're going to all start reporting earnings here next week. This week, earnings season started. It's Q2 earnings, and it's with the value stocks, the banks. And I like the banks. I think you want to buy them when nobody wants them. That's the way I've made the biggest returns for my clients and myself. You want to buy them when nobody wants them. So I'll give you an idea. JP Morgan came out with earnings. They did very, very well. The problem with the banks is that they're having to set aside loan loss reserves. So JP Morgan beat. They came in at $1.38 a share versus $1.04 earning. These are lowered expectations, by the way. But JP Morgan had to come out with had put away $10.5 billion. That's $10.5 billion with a B in loan loss reserves. Luckily, JP Morgan had a lot of trading activity in their trading department, trading stocks and bonds. There's a lot of activity after the March collapse. So that department surged 77%. So that's good. Wells Fargo earnings were crap, and I said I didn't like Wells Fargo, WFC, and the New York. I don't like the stock. I don't like the way they do things. I have friends that work at Wells Fargo in the investment management department, in the advisor department. Great guys. I don't like the bank itself. I don't like what has happened and how they're doing. They've had to put away $9.5 billion with a B in loan loss reserves. Citi, by the way, I own for clients and myself, JP Morgan and Citi both. Okay, just so disclaimer. But Citi came out, they had a decent quarter too. They came out 50 cents a share earnings. And by the way, the reason we say 50 cents a share in earnings, it's better than saying they earned $2.763 billion. Okay, so what we do is you take that $2.763 billion, you divide it by the number of shares are outstanding for the company, and that's how they come up with the EPS, or earnings per share. It just makes it easier when calculating how much money they made and doing comparisons in analytics. So, 50 cents a share and versus 28 cents. So, pretty good. Revenue's up 5%. Citi had to put aside $5.6 billion. They don't have as much in the mortgage area, but what they do have is a lot in credit cards. Okay, they are number 3 in credit card issuing. And they said that they offered forbearances on their credit to 2 million accounts. About 6% of their balances are in forbearance. So you have to be prepared that they're going to have some loan losses there. Across the board, the banking sector will have loan losses. But the banks did have a pretty good day. I do like JP Morgan. I think it's a great value stock. I'll show you the chart on it. I do like Citi as well. One thing about Citi, it trades at about 55% of book value. JP Morgan's near book value, and I'm going to get that number for you. I'm going to, come on, Lee, you weren't prepared for that. Okay, I know, because I got 3 screens going. I got to move them all around. So let's pull up JP Morgan. I'm going to take a look at what they're trading at. But that's basically the difference between a growth and a value stock. Okay, a value stock, the sum of the parts are worth more than the whole. So basically, you can buy JP Morgan at $99 a share. Okay, the book value, I mean, if you split it all apart and sold the parts, well, book value in JP Morgan is actually slightly higher now because a little move. It's at 15% above book value. But let's take a look at Citigroup. Citigroup is really interesting because I like the stock. I think that over time, this is not a quick trade, over time will do well. They are trading at 54% of book value. So Citigroup is trading at $51. So basically what that means is if you were to break the company up, you could get over $100 a share for the stock or for the company. So trading below book could be a decent opportunity. JP Morgan, though, they are firing all cylinders. Their trading reports are incredible. I like that a lot. Now, what I want to talk about is a couple of other things that are concerning me about the markets. I want to talk about a formation. This is a technical formation that you look for. And it's called a one-day reversal. And I'm seeing them happen typically when tops are coming into play. Okay, and I'll show you some examples of it. Okay, so let's take a look. My first example is a stock that, stock that I own and clients own, depending on if they could. Okay, let's take a look. Here we go. Amazon. Let's take a look at Amazon. So, Amazon, let's get a chart on it, had a one-day reversal 2 days ago. So you see this top right here, that spike? The stock in the morning took off and got to $3,344 in the high. That was on Tuesday. By the end of the day, it closed down to 3104. And typically, that's usually a sell signal. So short term, that's a top. That's called a one-day reversal. A lot of people call it an island top. But as you can see, the stock is down 10% in just 2 days from its high. Let me show you another one. And, let me see if I can get you a better look, because I think probably on, okay. Yeah, let's try this one. I think I can get a better view of it on this. So let's take a look at Amazon. By the way, and I'm not telling you to go sell Amazon now if you own it. But for a trader, if I was trading the stock, which I'm not, I'm holding on to it because that's how you get winners. That's how you make big impacts in portfolios, is holding things till they are fairly valued. By the way, it's probably fairly valued. But here it is. Here's the island top, a big breakout, and then closing at the low of the day, and then of course the stock is down 10% from that intraday high. Let's take a look. I know we got fans out there of Tesla, but Tesla very much the same. Look at that, a big spike, close at the low. However, it managed to close up today, but I still think that's a warning sign because it's also, when you see it accompanied by volume, let me get a temporary line pen. When you see it accompanied by volume, that's a sign. By the way, if you have any questions, call 407-831-8002 or email Nikki@stockdr.com. Nikki@stockdr.com. The yield on both. Oh, okay. So Johnny's asking the yield, I assume, Nikki, on JP Morgan and Citi. Is that a yes? You can answer me via the whatever you're using. Okay, so let's continue with the one-day reversals. And I mentioned Apple. Now, Apple has not quite a one-day reversal, but here it is. But it didn't occur. Okay, thank you. It didn't occur really with the extreme volume we're seeing on the upside, so I'm okay with it, but that's also kind of a little bit of a sign here. And that I'm seeing across the board. We're going to talk about Moderna also. I know a lot of people have questions on that, but let me go ahead and give Johnny we have a question about the yields on Citi. And now keep in mind, Johnny, the yields are changing. Okay, banks are being limited how much they can. Something came out here recently because of the COVID thing. So as of right now, the yield on Citi is 3.9%. However, like I said, I'm not sure what it's going to be when this is all said and done, and that's something that we probably need to check into. JP Morgan yield is 3.6%. So we're seeing a lot of those one-day reversals, right? Now let's talk about what's really big in the news today, and it's Moderna. Moderna is the COVID stock. So mRNA on the NASDAQ, okay, a biotech stock. They don't make any money. They've never made any money. They've never even brought a drug to market yet. But they seem to be in the lead for coming up with a vaccine for COVID-19. So, of course, they're in play. And I'll show you some charts of stock in just a moment. But they just came out. Now the stock is running on a trial of 35 people and ages 18 to 55. So they did a trial on 35 people, ages 18 to 55. They said they saw a robust improvement on all of them. And I say that's great. Okay, but what about the ones who really need it? I'm not saying that the ones that younger don't need it, but the risk class, which is the elderly, 65, 70, 75, what's happening there? Okay, we have to walk before we run. I totally get that. So let's disclaimer time. All right, I own some Moderna personally, and for some clients, but not a lot of clients on the Moderna because it's a high risk play. And I got to make sure you have to understand that if you're going to play in that sandbox, you better be prepared to get buried. Okay, so let's take a look at Moderna, mRNA. And I'll tell you when I bought it and give you an idea. So let's, okay. So let's, mRNA. All right. I hear the phone's ringing too. Why is this not changing? Okay. By the way, if you do have a question, go ahead and get a hold of Nikki at stockdr.com. Okay. This is Moderna. Of course, back here, pre-COVID, stock was $20. It did zippo. All right, look at that. Nothing. And then COVID-19. This is February. This is March. Okay. So here's what happened. Stock had a big run saying, hey, these guys were in the lead. And by the way, one-day reversal right here. This was back in mid-May. Hit a high of $87, closed near the low, went straight down from there. All right. I bought the stock around $64 to $65 right here. Because I saw the big spike. It traded sideways. It came close to the 50-day moving average. I'll eliminate some of those so you can see it. And I believed, so right around here near the 50-day, right here, and I believe that they probably have one more run in them. Don't know if they're going to have a vaccine. Have no idea. But I was willing to speculate. Stock today ran to $85, as you can see here. But what are you seeing? What was the theme today? One-day reversals. Look at this. So that, to me, is disconcerting. I would totally think that tomorrow it goes down. I'm not concerned about that I own it because I own it at 64. It's $80. I'm looking for more of a home run on this one. If it goes back to 70, I'm okay. If it ends up being 60, I'm pissed. All right, I'm pissed at myself. But I think, now I wouldn't go out and buy the stock. All right, it is a stock that I would buy only for the most aggressive accounts with risk capital, and I'd buy on a pullback. I'd want to see it closer to somewhere around $70 before I even before I took a look at it again. All right, we have some more questions. We'll go there. Let's see. Lewis wants to know about Boeing, and we're going to talk about the leisure sector in general. But here's the thing about Boeing. I bought some Boeing last week for some new clients who came in, and I own it, but I've owned it for a while. I bought some at 174, 175-ish. I think some other people in the office bought it at 174 and 75. Boeing has had negative numbers in orders on the books. Believe this. They are negative 784 planes on orders. What do you mean negative? Canceled. They've only delivered like 27 planes this year. They have had 784 cancel or net negative. The month of June, 182 canceled planes. So, what does that do for the stock? Well, I'm glad you asked that. I think the stock is bottoming. And typically, stocks, if they're going up on bad news, that is a sign, my friends. So let me show you. Here we go. Boeing, look at this. You had the major collapse, sideways trading. It's finally above this moving average. That's a 50-day. That's important. It spiked up to 230 on speculation that the 727 MAX is coming back into play. It did not. And now it's pulling right along the 50-day. So I personally love the action I saw today. I bought it here a couple of days, last week I bought it right here, 74. And the stock's at 187 now, up 7 today. So when you have the bad news come out, that it came out today, and the stock is up, that to me is a really good sign. That tells me that Wall Street has sold it out, and it's likely going higher. So I'm not telling you to go out and buy Boeing. I don't know your personal situation, and you have to understand that there is risk involved in something like Boeing. Keep in mind, it was $89 a share in the March low. So that's quite a hit if that happens. So what I would look at is watch it closely. It will probably pull back in the 170 something range again. If it not, you miss it. That's it. I mean, there was an old saying when I was a broker, and I don't know if I could say it. I'm trying to think of the best way to say it, Nikki. You and I discussed it. But you said it wasn't offensive, but it's... okay, I'm going to try and put it this way. And this is back. I've been doing this for 33 years. Bonds, babes, and big moving stocks. There's always one coming around the corner. So, there's always going to be another one. If you miss any of these, if you miss something, be patient, let it come back to you, or find something else. There always going to be opportunity out there in the marketplace. So, speaking of opportunity, I get a lot of questions. Lewis, I hope I answered your question on Boeing. If you own it, you hold it, and I would buy on. Me personally, if I could assume the risk, I'd buy anything below 180 probably at this point. I think that it's trying to bottom here. And I'd like to see more volume. They are going to report earnings in 2 weeks, but that's irrelevant. I think their earnings, we know they're going to be shit, so I'm not worried about it. By the way, Apple reports earnings on July 30th, I believe, so that's going to be interesting. But I want to go into some leisure, because I get the most questions, besides biotech and COVID-19 stocks, I get the most question about leisure stocks. And what does leisure mean? Well, airlines, hotels, theme parks, cruise lines. Okay, so I'm just going to keep it simple. I'm going to use the KISS method. Keep it simple, stupid. That's me. I'm not calling you, me, because I need to keep it simple at times. Hold on, I need a drink here. So I'm going to show you some charts, and let's take a look at some airlines. And which, by the way, speaking of airlines, United Airlines, they have announced they're going to potentially lay off 30,000 employees. That's just awful. American, they are looking to lay off 25,000. So it's rough, and look at Delta. I mean, Delta, DAL, they're burning right now $27 million a day, and they're not even half full. All right, so obviously they lost money in their quarterly reports, a worst quarter in revenue since the 80s on Delta. So why does that pique my interest? Well, what did I just say? When stocks start to go up on bad news, that means that probably the worst is over. And here's another case in that where this was the big drop. All right, then the rally off the low, that's from 17. That was that low in March. I'm sorry, that's May, 17 to 37. And now the pullback. But it stayed above the 50-day moving average. That's important, folks. I really think that's a real critical juncture. But look at this. Up today, 9.5% on okay volume. It's not as big a volume it's been, but keep in mind, look at where the volume was last year, and then look where the volume was during the pandemic. So that's clear that the average volume has jumped so much that it's not average volume, but that's still pretty high volume for Delta. So the leisure stocks looking interesting here. Look at let's take a look at UAL. The charts look very similar. Yeah, big volume, taking them higher. Again, bad news, they're going up. Let's take a look at the let's look at a regional instead of a national. Let's take a look at JetBlue. Very similar, big move today at JetBlue, up 11%. So that's telling me that, you know what, these may be sold out. Remember, they're cut more than in half. So while we're looking at leisure, let's move on to the other line people like to talk about, which is the cruise lines. And I'm seeing very much the same on those. Look at the charts, look exactly the same, okay? But the difference is the cruise lines aren't even moving yet. They're not working. They're still docked. So that, to me, puts a little bit more risk in cruise lines. But today, geez, you had a 21% day on Royal Caribbean RCL. Let's take a look at Carnival. CCL didn't do as well. It was up 16%. Not bad, but they all look the same. Again, going up on bad news. And Norwegian today up 20%. So looking very interesting. So what I'm saying is there may be a common theme here, that the bad news may all be out in the leisure industry. I haven't bought yet. Well, I have a small position, very small position in a casino / convention. So I was going to get to that next. So let's take a look at some of the casino stocks. And here's the one that I do own. For some clients that can assume the risk, and myself personally, it's Las Vegas Sands. I like that one because if the convention, if my aunt had testicles, she'd be my uncle. But if the convention business comes back, Las Vegas Sands has a really good opportunity there. But the stock was up nicely today. You had a good 6% day on the upside. Volume's taken a higher lately. I like it down here. I think the stock could probably run to 58-ish. I think in the short term. Again, it's a high-risk stock. Let's take a look at MGM. One of the other leaders in the group, looking the same way, big volume. But again, these look like the airlines did. There's a common theme here. And let's say Wynn, which is the high-end stuff. I love the high-end stuff. Yeah, you won't catch me in Las Vegas Sands, but I will stay at a Wynn. Okay, same thing. So they're looking interesting. I'm not buying them yet, except for I do own a small position in Las Vegas Sands. I own some clients. I do own that one personally as well. And when I say own them personally, I mean I personally own them in my retirement accounts or my trusts or whatever. And I'll tell you when I sell them. But I'm not trading the snot out of my own account. I mean I'm too busy working with clients and managing their money. Which, by the way, if you need help, and a lot of people have lost their jobs, and I got one thing that you're not thinking of is that, I had a 401k there for 10, 15 years. We can help you with that. We do execute those rollovers, and we can actually manage the assets. And I'd say most of our accounts are rollovers, IRAs, tax deferred type, tax incentivized type accounts. So let's go to another part of the leisure business. I'm going to wrap things up here in just a few minutes. Let's talk hotels. I'm nervous about hotels, but here's a straight hotel play here. Marriott International, all looks the same, but I know that rates have gone down in these hotels. I know this, and I believe that's temporary. I think as capacity increases, rates will start going up. But in the meantime, the stocks are still an abomination. So let's take a look at Hilton. Now, Hilton had a pretty good day today, up 10%. Volume, I mean, it's okay. I'm not sure I'd go into the hotels just yet. I'm not a huge fan of the hotels, and I think that they're in for some problems. As I have a problem with the cruise lines, because who knows if they get delayed any further. That's a possibility. Just like I had a problem with Disney, thinking that I sold my Disney at 124, but I had bought it at 88, 90, 92 tops. So I took a profit. Now Disney's back to 120, 121 or so. And that's because they reopened. And that's what I thought was going to happen. However, I'm not sure, and I hope it doesn't, for the folks that work there and the vendors that need Disney. Stock closed at call it 121, just under. I hope that they have a smooth opening, and now the other parks are opening, so we hope. And that's because, hey, they're Central Florida's biggest employees. We hope that. So my point is, though, is that you really need to watch your investments, and that's what we do. I look at my accounts every single day. When I say my accounts, client accounts, I look at them every day. When I tell clients that, yeah, I look at your accounts multiple times during the week, that's fact. I do that. And I only have to do it on a quarterly basis based on my documents in my what they call the ADV, okay, which is whatever, it is what it is. But I watch and I monitor the accounts. My staff watches and monitors accounts. You receive phone calls. So if we can help you with your 401ks, your IRAs, your trust accounts, give us a call, 407-831-8002. You see it right there on the ticker. And I really appreciate it. Stay tuned. You're going to hear our podcast coming out. We're going to do one tomorrow. Then we're going to start releasing them on Monday night for Tuesday. So that is a Stock Doctor prescription. And you can find them on Apple. You can find it on Spotify and all the others. Anchor, all the podcast type stations, which I'm not really sure of all the stuff that's on. Anyway, I am Lee Seiler, also known as the Stock Doctor. I really appreciate you guys taking time out of your evening, or if you watch it tomorrow or the next day, I really appreciate it. But share this video. If it's helpful to you, it's helpful to other people. And last thing is try and be kind to one another, okay? Don't be brave behind a keyboard, please, all right? There's a lot of bravery behind a keyboard. Try and be kind to people. I appreciate it. See you next week.